Hey, Dan Passarelli here, wrapping up at the end of the day, and we got that breakout that I was talking about in yesterday's video. We did bounce off. I want to show you a picture of we bounced off that 200-week moving average, and we did go through that 20-day key moving average, where a lot of times you get some pretty good follow through. But the market retraced a fair amount. It was up. The SPY was up over $8 this morning, but it's been kind of in the doldrums the rest of the afternoon, and it's on sort of average volume. Also, again today, all the sectors were up, including communication services as well as technology, although they were up less than all the other sectors. Health actually was up just a smidge as well, about 0.5%. Healthcare. So, it was kind of a lackluster day. I wouldn't have been surprised to see a little bit more follow through than we have for all the technical reasons that I mentioned yesterday. And with all the sectors, having a little bit of strength today, but we didn't really see that. What's some of the keys to this? Well, some of the keys to it is earnings. We did have some earnings come out yesterday. Goldman Sachs. We kind of see a similar picture here, right? It kind of bounced up, just kissed its 50-day moving average, but really kind of pulled back rather significantly. It was up, oh boy, like that comes close to about 30% at one point today, but not now. Now it is up significantly, no, not 30%, but it was up a fair amount. Now it's only up about 2.33%. So that said, we're still going to have to take a look and see at what happens with the rest of this earnings season. Next week, of course, is the really big week. But that said, we do have some coming out today after the close. There's Procter & Gamble, there was Abbott, there was Netflix, United Airlines, and a couple other pretty big ones. This is the week where I would say this is kind of the first official week, even though there were some last week. Next week's kind of the big one. But there are a couple things to think about throughout this earnings season. One is the earlier weeks in earnings seasons tend to have more volatility. Interesting, right? The other thing is that we do have some tempered expectations. And then finally, the third thing is that some of the stocks that have had earnings release, and it hasn't been that many, but they've sort of underperformed and maybe not outperformed expectations as much as they usually do. Because typically, on average, most stocks outperform expectations. This time around, they did, but not quite as much. So it's a unique scenario there. That said, going forward from a technical standpoint, we want to go back to the spider chart, but this is going to be sort of a proxy for anything you might be looking at. Is we're gonna watch to see if we go back down below this 20-day moving average, and if we break down through that, that would be a bearish signal, and then we're going to keep a very sharp eye on the 200-week moving average. So I hope that helps as the story unfolds tomorrow. There'll be more stuff to share with you. That said, hope that helps. This is Dan Passarelli. Trade smart.